Let's start with Kaspa, because the recent price action tells a fascinating story. Over the past month, Kas surged 40.41% with a weekly gain pushing 7.48%. But if you zoom out 6 months, you'll see a 13.64% loss. This creates a critical question. Are we witnessing a genuine reversal or just another bull trap in a downtrend? Here's what the data actually reveals. Kaspa's trading range between 5.96 cents and 9.16 cents shows volatility, but it's controlled volatility. The price isn't whipsawing randomly, it's respecting defined levels. That suggests accumulation, not distribution. When you see tight ranges with occasional spikes during broader downtrends, institutional players are often building positions. The technical setup reinforces this interpretation. Nearest resistance sits at 10.78 cents, with a secondary barrier at 13.98 cents. Support levels are clearly defined at 4.38 cents and a deeper floor at 1.18 cents. These aren't arbitrary numbers, they're zones where buyers and sellers have repeatedly engaged, creating price memory. Moving averages signal a bullish trend, which matters because moving averages smooth out noise and reveal underlying momentum. When price action aligns with moving average direction, it confirms the trend isn't just speculative spikes, it's sustained directional movement. If this technical breakdown is giving you a clearer picture of how to approach volatile mid-cap opportunities, hit that like button right now. It helps YouTube show this analysis to more strategic investors who need this perspective. And if you're not subscribed to TJ Crypto World yet, fix that immediately. I'm consistently bringing you the technical and fundamental analysis that separates profitable decisions from emotional mistakes. Hit subscribe and turn on notifications. Now let's continue with 2025 projections. Let's address what actually drives crypto prices beyond technical charts catalysts. Both Kaspa and Stx have specific developments that could propel 2025 valuations significantly higher. For Kaspa, the primary catalyst is continued adoption of its high-throughput infrastructure. As blockchain usage expands beyond speculation into actual applications, payments, supply chain, data storage, networks that can handle volume without congestion gain competitive advantages. Kaspa's GhostDAG protocol processes blocks in parallel rather than sequentially, enabling massive scaling without sacrificing security. If Kaspa secures partnerships with payment processors, enterprise clients, or gets integrated into larger ecosystems, that shifts it from speculative infrastructure to utilized infrastructure. Price follows utility. Always. For Stx, the Bitcoin connection provides built-in catalysts. Every positive Bitcoin development, ETF inflows, institutional adoption, regulatory clarity, indirectly benefits Stx. Additionally, the Bitcoin halving occurring in 2024 historically precedes bull markets. If Bitcoin rallies through 2024 and 2025, attention flows to Bitcoin-adjacent projects offering additional functionality. Stx also benefits from the smart contract narrative. Ethereum dominates this space, but its gas fees and congestion create demand for alternatives. Stx offers smart contracts secured by Bitcoin's proof of work rather than Ethereum's proof of stake, appealing to users who prefer Bitcoin's security model. The regulatory environment also favors both projects. Kaspa's proof-of-work mining model aligns with regulators' understanding of commodity-like crypto assets. Stx's focus on building atop Bitcoin rather than competing with it positions it favorably as regulators distinguish between securities and commodity. Market structure matters too. Both Kas and Stx corrected significantly during broader market weakness, creating entry opportunities for patient capital. When markets eventually recover, and, crypto markets always cycle, assets that corrected hardest often rebound strongest. This isn't guaranteed, but it's a pattern repeated across multiple cycles. Let's establish realistic 2025 price targets grounded in technical levels and fundamental developments rather than hopium and moon math. For Kaspa, breaking above 10.78 cents resistance opens the path toward 13.98 cents. If broader market conditions improve and Kaspa secures adoption milestones, reaching 15 to 18 cents by late 2025 becomes plausible. That represents roughly 100 to 150% upside from current levels, substantial but not fantasy numbers requiring everything to go perfectly. Bear case for Kaspa. Failure to hold 4.38 cents support could trigger deeper retracement toward 1.18 cents. This wouldn't invalidate the long-term thesis, but would require reevaluating entry points and timeline expectations. For Stx, a sustained break above 94 cents targets $1.22, with extended moves potentially reaching $1.50 to $1.80 if a Bitcoin bull market materializes, and Stx captures meaningful developer activity. That's 150 to 200% upside from current levels, ambitious but supported by both technical structure and fundamental catalysts. Bear case for Stx. Rejection at 94 cents and breakdown below 38 cents could push price toward 10 cents support, creating a longer consolidation phase before upside attempts resume. These targets aren't predictions, they're scenarios based on if-then frameworks. If catalysts materialize and technicals cooperate, these ranges become achievable. If catalysts disappoint or broader markets weaken, downside scenarios activate. The critical insight is this. Both Kas and Stx offer defined risk-reward setups. Entry near support with stops below key levels creates asymmetric opportunities where potential gains significantly exceed potential losses. That's the foundation of strategic position building. Here's the pattern I see repeated constantly with volatile midcaps. Retail investors chase after big moves have already occurred, then panic sell during healthy corrections. This destroys returns. Look at Kaspa's 40% monthly surge. Retail sees that number, experiences FOMO, buys at the top of the move, then watches price consolidate or pull back slightly. Panic sets in. They sell at a loss. Then the asset resumes its uptrend without them. The professional approach inverts this. Accumulate during consolidations and corrections when retail sentiment is weak, then trim positions during surges when retail enthusiasm peaks. Buy fear, sell greed. It's cliché because it's true. Both Kaspa and Stx offer current opportunities precisely because they're not dominating Twitter feeds and YouTube thumbnails. When assets are slightly boring, consolidating after corrections, not making dramatic moves daily, that's often when the best accumulation happens. The technical signals support this. Neutral momentum indicators, RSI not in extreme zones, price respecting support levels. These aren't red flags. They're signs of healthy consolidation that precedes the next directional move. Risk management separates strategic investors from gamblers. Position sizing matters enormously with volatile midcaps. These aren't assets you overexpose portfolio capital to. They're calculated bets within diversified crypto allocations, sized so that even complete losses don't derail broader investment strategy. Stop losses protect capital. If Kaspa breaks below 4.38 cents or Stx breaks below 38 cents, those technical breakdowns suggest the thesis isn't playing out as expected. Exiting positions at predetermined levels prevents small losses from becoming catastrophic ones. If this framework for evaluating mid-cap opportunities gave you actionable insights, show this video some love with a like and share it with someone who needs better tools for assessing volatile assets. Subscribe to TJ Crypto World if you haven't already. I'm bringing you the technical and fundamental analysis that helps you make decisions with confidence rather than emotion. Drop a comment telling me which mid-cap projects you want analyzed next. Your suggestions drive my content calendar. Appreciate you investing this time with me, strategic thinkers. This channel exists to help you navigate crypto markets with frameworks that work regardless of market conditions. Check out my other videos breaking down altcoin opportunities and portfolio construction strategies. Stay strategic, stay disciplined, and I'll catch you in the next one.